On the entrepreneur journey, some entrepreneurs aren't successful. What is it that you think makes an entrepreneur not succeed?
Well, I mean, of course, we all know that most entrepreneurs aren't successful. It's super hard actually being successful as an entrepreneur, but I think many of them get sort of lost in the early days of innovation. You do your business model and you get it out there and you're testing things and you're refining things and you're trying stuff. Oftentimes that's such a seductive, creative time that people never exit it. And they realize they haven't really built a real business. They've done really cool things that they're proud of. But I actually have some concerns about this new view that you want to fail fast and you want to pivot a lot, because I think it can lead to a lack of discipline in the entrepreneur's sort of way of operating that leads them to waste a lot of money, try lots of stuff without really understanding where they're trying to go.
For a lot of entrepreneurs, you have all your hopes and dreams wrapped up in your business, at least from a career standpoint. But a lot of times you've made commitments to your family and your friends. They may have invested in you as well. So you have a lot on the line. The high being highs, those are wonderful times. I think what you learn is that celebrating is important, but you can't necessarily count your chickens too early. The lows being low are probably the hardest, and that's where you've got to have that eternal optimism that an entrepreneur brings, even when things are looking more dark and grim.
The thing that folks don't like to talk about with accelerators is we accelerate in both directions. We don't only accelerate product market fit and scaling, but we also invalidate some ideas. And so you can have some dramatic moments when founders realize what they thought they had, they really don't have, or even they find something, but once they find product market fit, they realize they're not nearly as passionate about this new company or product.
So it sounds to me like there's that proverbial fork in the road, and they can either take one path and pivot, or is there some that just like, I'm out, I'm going to go back to the bank and work the cushy job?
Ultimately, our North Star is the entrepreneur. So we're there to give guidance. We're there to support them in any way we can. But we've seen situations where founders are no longer part of the company after the 13 weeks.
I think one of the hardest things is to figure out who can you really trust. When you don't have the expertise, it's hard to really know what you should be getting or what you should be doing and who do you partner with. And we definitely had some starts and stops there before finding the right partner.
To know if you have failed or succeeded, first you have to define success. What will success mean for you? Are you the type of entrepreneur who enjoys ideation and an early exit? Or will you only be satisfied if your idea goes from the garage to a global stage? Will selling your idea so that you can focus on the next be success for you? Or do you want to build teams and infrastructure and new products? Or maybe changing a life will mean you have succeeded. There is no right answer, but if you don't know your answer, you may end up like the proverbial rat in an endless maze.
For a fintech company, what is the definition of success? What metric, what level does a fintech company need to get to where they feel successful?
Ultimately, everything that we do is centered around having them be able to articulate their vision, their value proposition as succinctly as possible. Now, do founders want to know that they just spent 13 weeks just learning how to talk about their business for 30 seconds? Probably not. But ultimately, that's the best thing that can come out. To give you, again, more quantitative measures of success, once they get into how do they hone their pipeline, their enterprise pipeline, how do they really hone the funnel for customer acquisition, which is to say customers are definitely buying what they're selling and it's time to optimize that sales process. That's a great position to be in.
There's no one-size-fits-all recipe for success. And I think that one of the most important things that companies need to focus on is to rush as quickly as possible to move out of being in startup mode. If you do that, you can only do that if you succeed in getting a first paying customer. And something happens inside of an organization when you find that first client. You basically shift from this romantic view of what a startup is to being responsible for your products, for your relationship, and for the value proposition that you're looking to deliver.
For me, success is being able to execute on what we said we were going to be doing. And when we go and pitch our venture capitalists or tell our customers that we're going to be successful on their behalf and help source deals or whatever, I think those things are all success metrics. In the end, really being able to pay your bills and pay your employees is also a big measure of success. We recently, not only did we do our Series B fundraise, we raised $30 million in that. We also just hit $1 billion in funded through the platform, loans funded through the platform, which is a big milestone for us. But I think the real success metric is how we're impacting the overall ecosystem for the benefit of borrowers out there. So giving borrowers more flexibility so they can go out there and improve houses throughout the country. And the work these borrowers are doing in their communities is a very positive thing. They're going out and finding some crummy house in a neighborhood and turning it into one of the better houses in a neighborhood. And if you do that once, that helps the whole neighborhood. If you do that a number of times, not only are you creating these local jobs and supporting the local economy, et cetera, but you're really improving the entire community. And so if you can find something like that that has all these positive ramifications beyond your core business, then you're really onto something.
Success for us is to see our mission go and touch every family everywhere. And so part of what we did early on was to protect our IP, not just in the US and globally, because for us, success is really seeing this not just help families here in the US be able to worry less about running out of money in retirement, but really making sure that families everywhere are able to plan ahead and be able to protect their loved ones.
We had been changing business models a number of times for a couple of years, and then all of a sudden it really started working for us with, actually strangely enough, as a FinTech, direct mail became a huge channel for us. And we created what we called the Tsunami Project, where we put the entire focus on the company on one channel, one product, and quadrupled in size over that year. And that's sort of the thing I think that it's such a challenge to do. And of course now as a public company, now we have to find that other balance, which is not just focusing on the focus, but also making sure to do innovation at the same time. So it's always a balance, but it kind of changes over the life cycle of a FinTech.
We just signed our first 2 large-scale enterprise contracts. So if you want to talk about a make moment, that's amazing. And we kept wondering where are they going to be, who's going to sign first. And we were making bets in the office, and they both signed within a week of each other. So something like that is a huge make moment. Some that are that's a true validation of business. That's a true milestone that we're not just this little FinTech company, but we're also, if you think about it from an enterprise, a FinTech situation, we pass security, we pass compliance. Large banks take this stuff very, very seriously. And so for a FinTech company to be able to then pass all those checks and have their confidence, that was a huge make moment for us.
So if you're speaking with a FinTech entrepreneur, what advice would you have for them when they're starting out? And then what advice would you have for them to keep it sustainable?
So if you think about what we do, we surround entrepreneurs with all the support resources. Over 100 mentors come through our program. There's no reason that any entrepreneur can't surround themselves with that pseudo board of advisors to give them advice. The key is that if you're getting saturated by too much feedback to handle, that's probably the right amount. So whether you're a college student thinking about something, an aspiring entrepreneur, still working in financial services, thinking about doing something next, surround yourself with as many people and have them hold you accountable by keeping them updated on whether it be a monthly or a quarterly basis on what you're working on. It's really about establishing a culture of making sure you're always getting that level of feedback. Really, all the 13-week program does is it establishes that as the new norm, tracking KPIs and having brilliant people around you that are going to hold you accountable.
You've got to have that mental discipline, and that actually can help you get through the tough times and also not get too high on the high times too.
You need to pace yourself, organize your financial plan accordingly. You need to link that to the various inflection points in the arc that you're looking to travel. And it is extremely important that you plan that properly.
I see people make this mistake a lot where they get involved in businesses and it's like, oh, I'm going to make this app or whatever, but and it's fun, but it's like, okay, cool, but what's the broader mission. How does it actually impact people's lives, you know? And why should employees go to work and work on this problem? Beyond just being positive for the participants, try and make it something that actually helps people even who aren't participating in the business and helps the broader ecosystem.
There's a lot of different ways you can build a fintech company. The way that we've chosen to build one is very, very driven around a mission that I think everybody can have that gut moment that they can relate to. Although I do know people who have successfully built companies that are just totally focused on, they have found an idea and they want to do it. But I think with the peaks and the valleys, the ups and the downs, it's not just for you, it's for your team. It's really hard to keep saying why I'm doing this if there isn't a mission that you believe in behind it.
So as we've seen, creating a fintech really is that easy. You fall in love with a good idea, you get the support you need to make it grow, you follow your instincts, you decide your own path to success, you fulfill your fintech dreams, and continue to thrive. Best of luck. Not that you need it.
And so, our journey comes to an end. We hope you have enjoyed this BrightTALK original series, The Life Cycle of a FinTech.